Okay, so our current issues presentation was on Luckin Coffee and it's out of Luckin Coffee Company and the still raw reminder one in '08.
I'm
My
Michael
name's
O'Grady. Oh, sorry.
my name's Will.
Yeah, I'm Mike.
All right. So some company background. Luckin Coffee Incorporated is a China-based company that quickly made its viable competitors, Starbucks. It was incorporated in June 2017 and then began operations in October of that year. The company has three different types of stores. The main type that makes up 91.3% of its locations are pickup stores. These stores offer limited seating and are located in office buildings that have built-in demand. Technology is essential to Luckin's business model and is the main proponent of its differentiation from Starbucks. Through using AI, they're able to standardize their operations to analyze computer or customer behavior to better select products and services. Its mobile app is a large contributor to the company's potential success. The company was portrayed as a technology startup that delivers coffee to your desk with just a few touches of your smartphone. The trite "if everyone in China buys coffee" argument also seemed to make investors less skeptical about its astronomical growth rate. So Luckin is the rival to Starbucks. The problem Luckin was facing is that the coffee market in China is growing rapidly and is very competitive. Starbucks, for example, stated that they aim to add 600 new stores annually to reach 6,000 locations by 2022. Starbucks has also partnered with Alibaba for delivery service in 2,100 stores. Luckin focused on their differentiator, which is better quality and faster service. Starbucks' third place experience, where customers normally stick around in the store after a purchase. Luckin in 2019 was able to overtake Starbucks in China locations, starting at, I can't see it from the logo, but I think it was 2,500 locations in March and ended with over 4,500 to Starbucks' 4,100. So there were some more.
Okay, so far right now, this sounds like it's a great idea.
Yeah, that's that when it got early 2019 to U.S. investors, and there was a lot of potential upside because of their growth so far. But then there were some warning signs that people started to notice about Luckin. So Luckin Coffee is a variable interest entity, VIE, which is a structure created in the 1990s as a workaround for Chinese companies not allowed to have foreign. Under this structure, there are two entities. One is in China that holds the permits and licenses to conduct business. The other entity is offshore, where foreign investors can buy shares. In Luckin's case, it was in the Cayman Islands. The Chinese entity, usually owned by top executives, pays fees and royalties to the offshore company in its contracts. The risk in this is that foreign investors don't actually own stock in the company, and even the Chinese government can't force a split with the listed company, leaving U.S. investors basically screwed. Their business model is another sign that the company's growth may not be sustainable. Luckin was subsidizing every cup of coffee to increase growth.
So they were selling, wait a minute, they were selling them at a loss?
Yeah,
Yeah.
selling. Yeah, I guess essentially giving it away.
Yeah, they were giving away coffee through like promotional and like loyalty programs.
Okay.
That was why they weren't making a profit for basically the entire time. So the concern with this is if they decided to eventually increase the prices of their coffee, they could see many of their customers leave for other options like Starbucks, which was much more popular. And in the current pandemic, that may be the nail in the coffin for Luckin, as they haven't been profitable since their IPO, so they likely won't have liquidity to survive. April 2nd was a turning point for the stock. On Thursday of last week, Luckin stock saw a catastrophic dive from $27 at $8.20 to $4. This occurred following an anonymous report publicized by a U.S. short seller earlier this year that raised suspicions about the company's accounting, as well as an allegation that, beyond falsifying revenue, Luckin had manipulated order numbers in its app.
So somebody just sort of anonymously just threw this out there?
Yeah. I forgot the short seller's name that reported it, but yeah, Luckin said that it was unsubstantiated and ignored it pretty much, but
Okay.
later ended up being true. So as a result of this, trading of the stock was halted for pending news on its ongoing internal investigation and is still halted currently. And the on the investment found that the chief operating officer fabricated 19 sales by about 2.2 billion won, or $310 million.
Okay, so basically, like Will said, it hasn't been profitable, but also there's these massive problems with fraud, and I'll get to the anonymous report, but it's all based off an EY report actually that came out. But basically, like
Are you
nothing
going to
really
work
made
for
sense.
EY, Mike?
Yeah, that's where I have a job.
Oh, okay.
So I'm really touting them here. I hope they see this. I'm really pushing for that. They're so great. I love them. So basically, first signs of fraud. Like nothing was really adding up the whole time, and people, like they said, was the whole entire every cup of coffee for every person in China kind of seems like it makes sense, but questions kind of started building up even before the announced report. Basically, an unstable business model where they were just giving away coffee essentially a lot of times, and they kept growing was pretty amazing. I was reading an article. I didn't put the quote in here, but it was funny because the founders of Luckin, they actually said they thought they were being too conservative. That's what they said to the public, that they were being too conservative with their promotions. They thought they should give away more coffee and take bigger losses, but nobody knew they were taking losses. So basically, they're plenty of warning signs, like I said, subsidizing coffee, and it just wasn't really sustainable. And especially with the pandemic now, it's pretty much gone. Like, I mean, you can't even recover now, even if it somehow wasn't fraudulent. But really, both it's more the fraud, but the pandemic's going to kill it anyway. The stock, and like he said, hit highs earlier in 2020, but it took this massive dump following that anonymous report, but based off an audit report by EY, where EY came out and said that there was some fraud-related issues. They didn't say exactly what, so that's still to come out exactly what was up, but basically that they were putting up fraudulent sales numbers. But that's not where it ends, because Luckin's main shareholder, the actual founder of Car Inc., Charles Yen Yao Lu, fell 54% Friday, and that was because it's also fraudulent, and it's been overdoing its sales as well. So it's kind of like a whole circle of fraud that just comes back to bite itself. So basically, the point here is, I think we see this in 01 and 08. That's why I think the title is really tying back to these other financial crises, that in terms of, you might have thought that this company may have dropped because of the pandemic, but really this is just a lack of oversight and fraud. And so this shows the need for accountants, the need for public accounting oversight, so that investors, really don't get screwed. In America, public accounting has made huge strides, as we know. Sarbanes-Oxley in 08 with more regulation from the banks, for the banks too. And we see this happening in America, but on the other hand, China is still, to be honest, a pretty developing market in terms of ethics, probably, as you can see here. So their accounting oversight isn't as strict. When people can get away from that, especially as this article hinted at, if they have connections to the Politburo and Central Committee of the People's Republic of China. So when you have a communist country using capitalist markets, yeah, it's a bit of an issue. So basically, this says it's very, very scathing of China, this quote, but it's by this fintech article website. And they talk about all these big scandals China's been running into recently, and just throwing this on top of it, it's almost not really surprising. So this Corona coup de grace. So basically, what I was saying before is, the fraud's going to take out the stock, but the pandemic's going to absolutely kill it. I mean, it's buried. The nail is in the coffin. It's 8 feet under. This is a dead company. So Yeah, that's the gist of it. I mean, everything's taking a hit now, but this is gone. But the one thing I really is, in my opinion here, is sadly is true that in the goal to make money, even in very, very, very risky, probably fraudulent in this case scenarios, people will allow these companies on stock exchanges in America to get essentially a quick buck.
And the investment banks promote.
Oh yeah, they put it on. It's kind of sick. Like it's messed up. And that's why I said I think it's great.
Where was their due diligence?
I don't think it was there. But this isn't a unique problem. That's the thing with Car Inc. And then I'm going to get to another one on the next slide. Is this happens like with these Chinese companies particularly? It happens a lot, and that's really really bad because you're misleading American investors who and that's why I say it's un-American and un-capitalist because you're essentially taking these very very corrupt tied-in companies and putting them on a free market exchange. It's wrong. I mean, ethically, morally, financially, every way. So it's actually interesting. This film company made a documentary all about the Chinese hustle where this happens, and systematically they put investment banks routinely hype up Chinese companies, essentially, and market them to American investors. So I mean, they kind of know when they're going to this is going to happen again. It's not like, oh, it happened once, now we won't do it anymore. Be more careful. Like they don't really, there's no regulations, so they're just like, all right, let's just throw more people on more companies. So this is just another. What's that?
Greed thing. This whole greed thing.
Yeah, greed. Yeah, for sure. Talk about it.
Keep going.
Oh, okay. Sorry, I couldn't. It cut out for a second. So yeah, my point is Luckin isn't the only one, and IQE, I don't know how to say that. I'm not sure, but it's this video streaming company that, just like Luckin, had been accused of fraud and inflating its financial numbers, and this is them on the stock exchange. It's just like sickening. Like you look at them and they're like, oh yeah, let's go screw over American investors. Like it's like wow, like we're being taken advantage of like that. So it's something to think about in terms of you really gotta look into a company, but it's hard too if you're looking at a foreign company that's backed by probably the government, and they're saying it's okay. It's not really so easy. And this is just another company that did the exact same thing. That's them at NASDAQ doing their IPO. And then the final point is why accountants are essential, and I use the word essential because we hear it so much now in the pandemic crisis, but also it really is essential in terms of our economy. And you think, oh, accountants, how could they be essential? Like, doctors are essential right now and all these people, but this is kind of prime time for companies possibly to take, advantage of people because there's nobody's focusing on companies. So, and people actually want to focus less on the economy right now, some people. So basically, EY's statement on the fraud. EY, this is an affiliate of EY. They use the EY name, but they're not like actually their office, but they're an affiliate. They have a different name. It's a Chinese name. And basically, they give a very, very vague report, and this is where the anonymous report comes in. And basically, they say the audit committee, this jumped this up. Client confidentiality prevented them from saying much more. But in short, really, my point is EY isn't the reason Luckin was caught, and that's what I really want to make clear is no big four firm, no accounting firm anywhere is the one person bringing, justice to this system. It's really the system we have in place in America and other modern economy countries that really values integrity and values ethics. So yes, EY and all these big four firms are products of that, but it's really looking at the base theory and core values that we have in our economy, or we boast to have. Public accounting, again, provides one last line of defense for investors, basically the main line of defense, really, who without it would be pretty much helpless to these con artists and scam companies. So at a time of financial crisis and even public health crisis like now, accountants and auditors really are necessary and vital. And nobody's really arguing that, but some people may not think so. Since their role to protect people really doesn't end, it's in reality a very necessary profession, although mostly behind the scenes, and the work itself is honorable. It's mainly displayed in crisis times, which kind of is sad and people don't really see it. But even though it may look like this grimy kind of tough life, late night shifts, lack of sleep, eating on the client's dime, really these people, as much as they say they are really protecting people, which is good. So these are sources.
That really reminds you that you got to be cautious.
Oh yeah, definitely.
How do you think that relates to? Go ahead, Will.
That was What?
Does this, okay, then I must. I'll cut this piece out when we edited it out for clarity. Do you think this supports the old saying that if it seems too good to be true, it is?
Probably. Yeah. So fast that everybody just tried to hop on the train, and then, I mean, they were losing so much money compared to what they were making, but they were valued so high. So yeah, it probably was too good to be true.
Can I hop in though? I just have one statement. Like I guess I agree with Will. Yeah, like I agree with you. It's too good to be true. But with these companies, like it's so hard, especially what I've been reading. It's so hard to know. Like in America, yeah, I would say this is crazy, and you can pretty much see like who's investing in companies sometimes, like if it's public, you know. But in this term, like this is an overseas company. You have no idea. I mean, the Chinese government could be like pumping. I mean, I don't know if they did, but they could be pumping money into this company just to kill off Starbucks. I mean, they may not want a major American business. So I agree. Yeah, I mean, I wouldn't invest in this in the first place, but it really is like, you know, maybe they were pumping money and they would be really successful because they're just getting tons of funds. I don't know. But it's kind of like this kind of toss up. In America, I'd say yeah, but when you're overseas, it's tough.
Yeah. It's almost like the investors had a herd mentality that everybody went at it.
For sure. Yeah.
And everybody talking about it just kept it going further and further. Irrational exuberance might be a word that happened.
Yeah, I'm curious to see this stock trades on the day that it dropped. I bet it was like a couple like big holders on the American exchanges just let all their stuff off because they were like, I'm sure the little guys were just screwed that day. Like someone who owed, you know, 2,000 shares of it probably just got wiped off. His money's just gone.
Yeah, I mean, last year my friend was telling me about this company and how it was going to take over Starbucks there, and I was looking at it. Now I'm very happy I didn't invest in it.
That's good.
Yeah. So what did you learn? Well, what did you learn about this that you can apply to your own investing or trading?
Well, first off, this probably, as the pandemic started, wouldn't be a very good thing to invest in as it's in a foreign market. You would probably want to take your money out of places that you don't know exactly what's going on. Like you don't know how bad for Luckin over there. So I'd say going forward in times of economic stress and stuff like that that's going on right now, I'd probably go a more safe route than the expanding companies that are trying to, I'm not saying all of them are, but some of them might be trying to make their statements look as possible instead of really making sure that their balance sheets are strong so that they can have long-term success.
Okay. Mike?
Yeah, I mean, I think I agree, especially because with new information from our government, we don't really. I mean, maybe it would be good if there was no fraud. Even if it took a pandemic hit, Chinese companies would look good if, you know, there wasn't so much argument over how many people are really dying and sick over there. So if they really had the virus under control, their economy would bounce back quicker. This would probably be a great investment when it dropped because of the pandemic. But since it's fraud, you know. But yeah, I mean, I would definitely stay. Honestly, I would just stay away from the stock market unless you're doing really long-term investing at this point.
Okay.
Personally.
One of the things that I read this morning, and there's, you know, there's so much information coming at us trying to understand all of this, is that apparently the FASB has decided to delay implementation of ASC 606 and other things like that to private companies and franchisees. Do you think it's wise to suppress some accounting standards that some people have already started implementing and say, okay, well, because of this, we're not going to push everybody to? I think that could create risk within credibility thing, risk.
Yeah, that's good. I mean, ASC 606 is revenue recognition and when you recognize revenue, right? That's the big change about it. So, I mean, if people had their old, I guess, systems still in place for recognizing, I guess it's a chance for them if they had like a good system compared to ASC 606 to have better numbers by the end of the year. But I mean, I'm not really sure. Like, Overall, I think it's just tough because especially if you're cutting your workforce and people like that, it may be really hard to get that done by the deadline. Yeah, I don't know. This is unprecedented times. I'm kind of, someone has to change something. I'm kind of in the air. I'm like, yeah, honestly, we might have to do that.
Okay. So what did you guys learn from doing this? Either about yourself or about, what did you learn?
Well, I guess I learned that I mean, this was a company that I had actually looked at, so I guess this is like the first time that I've ever seen something where like something that I knew before was actually fraudulent. So going forward, I'd say I guess I'd be more skeptical of companies that are just seem too good to be true. I guess I'd
Okay.
be a little bit more careful.
Okay.
Yeah, I agree with that. I mean, like I said before, it's tough when you're not getting all the data. But yeah, definitely just skeptical.
Mm-hmm.
I mean, yeah, I mean, if you were there in the
Healthy,
beginning, you made money on this. That's good, but
yeah,
not get screwed.
healthy skepticism.
Yeah, definitely. That's very accounting. Yeah, professional skepticism too.
Yeah, for sure. Anything else?
No, it was an interesting case though. Actually, I enjoyed reading about it because it was so messed up. It's actually it wasn't like boring, so it was interesting.
Oh, that's a good way of looking at it. Yeah.
Yeah, yeah.
For sure. Well, thank you.